Nvidia earnings are out. We're talking about nearly a $4.5 trillion market cap. I've been investing almost 30 years. I have not seen a stock be this important to the markets as Nvidia right here, right now. So we have a double beat. Non-GAAP EPS of $1.05, beat by 4 cents. Revenue, $46.74 billion. That beat by 610 million, and that's up 55.6% year over year. Data center revenue, $41.1 billion, up 5% from Q1 and up 56% from a year ago. And Blackwell data center revenue grew 17% sequentially. Let's just talk about this for 1 second. $46.743 billion in this quarter. This is revenue without a single cent being sold to China. That is absolutely insane. Look at these numbers on the far right. You've got Q3 FY24 at the bottom there. We're talking about $18 billion in a quarter. Now $46.743 billion in 1 quarter with no Chinese revenue. Why is the stock down? This is the main reason why the stock initially was down about 5% after earnings came out. The Street Whisper, expectations are really high. The Street Whisper was $55 billion. And you can see that the expectation here for the outlook, $54 billion, even though the consensus says $52.76 billion. This is where it can be a little bit confusing because you look at this and say, well, it's a double beat and it's a raise, but the street was expecting $55 billion. Now, I'm not trying to make direct comparisons, but I want to share this with you. Back in 2000, when you had the dot-com bubble, you saw this quite often where you would have a beat, but you would have a street whisper that was a little bit higher than those beats, and you'd have stocks sell off. And that can be a sign of a top. It is interesting because if you look at the numbers, Nvidia is doing really well. What this really comes down to is the market is scared. The market's scared to make this a $5 trillion, a $6 trillion valuation company. This is uncharted territory. Remember, not that long ago, a $1 trillion company didn't even exist. And now we're talking about $5 trillion market caps. And I could be wrong. This is just my analysis. And I'm making this video while the earnings call is happening. But based on what I'm seeing, the expectations are high. And I know that Street Whisper was a little bit higher than what that actual estimate was for the guidance. Overall, it was a great quarter across the board. The problem is the market just expects Nvidia to crush it every single time. And there are concerns about Chinese business, about diversification, about the end of the cycle, about capex spend. But this, ladies and gentlemen, I believe is why the stock sold off initially when the earnings report came out. The company has not assumed any H20 shipments to China in this outlook, so it could very well be $55 billion. When expectations are high like this, it's not uncommon to have a knee-jerk reaction either way. I mean, we're talking about a $4.5 trillion market cap. It's a very polarizing stock. Many people think that it's very expensive. Many people think that it's still attractive valuation if it can continue the growth. And it's a tough one. It really is a tough one. Later, we're going to look at a chart and I'm going to tell you where I think the stock is headed. And if you've been following this channel, we've been talking about how this is a must-buy stock for any portfolio, pound the table, $12. So you've done very well in the stock. Where is it headed next? Let's keep going. All right, let's break some of these numbers down here. You can see this is the most recent quarter. Data center, it's crushing it. Only 5.1% increase quarter over quarter. Year over year, though, 56.4%. You can also see gaming is up 48.9% year over year. So this whole AI boom really started in 2022, and you can see 15%, 24%, 11%. It slowed down here, right? Went to negative 5.7% here. This is going to be in Q4 of 2023, fiscal year 2023. But then 18%, a huge jump here, 140.9%, and it's been crushing it. And so what I'm seeing here, what I'm seeing quickly, I'm looking at some of these analyst reports, I'm looking at some articles. The data center revenue didn't quite come in. The expectations were higher. We wanted even more. But it's important to look at a chart like this just to see that data center revenue, how it's trended very nicely. And of course, it's not going to grow exponentially like this forever. At a certain point, it's going to start to slow down. And of course, that's when Wall Street is going to punish a stock. So being down 3% or 5% after hours right now, it's not really that surprising. Expectations were just sky high. Another segment I've been talking about is automotive. And you can see that this is 69.4% year-over-year growth. It's still a very small piece of their business, a very small segment. Lots of room for growth in automotive as well as robotics, autonomous driving, and so on. So just to clarify here, again, I'm doing this video just right after the earnings report comes out in real time. Data center revenue up 56% year over year. It came in at $41.1 billion, and the estimate we're showing here on Seeking Alpha is 41.29 billion. That's not very much, but it's still a miss on the estimate. And of course, when you look at articles out there on CNBC and elsewhere, what Nvidia's earnings mean for the stock market and the AI trade. Of course, like I said in the intro, this is a very important stock, the most important stock since I've been investing ever in terms of just how important Nvidia is for the broader market. And you'll see Nvidia's closely watched earnings report showed weaker than expected sales in its data center business, which is true, but you have to look at the data too. The numbers are still very solid. And the article does go on to say that, hey, data center revenue, if you look at year over year, again, it's 56%. And data center revenue is 88% of total sales. Looking at Nvidia's performance after recent earnings, so this is going to be 1 day later performance. You can see -6%, -8%. 1 week later, it's been a drop. In these recent quarters here, -11, -7, -15. The stock likes to run into earnings and then sell off. Now, with all that said, the most recent quarter here, this is Q1 2026. Again, this is fiscal year. The next day, 3%. 1 week later, 5%. And 1 month later, 17%. So this most recent quarter has been good. Could the stock actually go higher? Could reverse and go positive tomorrow? Gene Munster says investors should focus on the guidance, which he described as good, again, lower than the street, versus though the short-term moves in the stock. He thinks the stock will rally tomorrow. It's very possible. I try not to predict daily moves or even monthly moves. I'm more of a long-term investor. I told you guys to buy this stock in 2022, pound the table, $15 or less, preferably 12. And I do agree that the outlook was really strong and eventually you'll be rewarded for that. So I do think Nvidia stock's going higher. We'll look at a chart later. I think this turns away the focus on the chip story, returns the focus back to the Fed. Nvidia is still trading at near all-time highs. Of course, if the Fed cuts rates, that could be a tailwind for stocks. So all in all, the AI trade is definitely still intact. One interesting thing to point out here, Nvidia said it sold no H20 chips to China during the quarter, but the company did benefit from the release of $180 million worth of H20 inventory to a customer outside of China. Now, before I forget, I want to cover this. Gross margins expected to be 73.3 to 73.5% plus or minus 50 basis points, and continues to expect to exit the year with non-GAAP gross margins in the mid 70% range. Now, the estimate was 72%, so this is actually above. The only thing that's potentially lower why the stock could be down, other than the fact that the stock's ripped very hard since April, it's expensive, you know the gist. This revenue, 54 billion, street 55 billion. And if you don't know that street whisper, well, you look at this and say, what the heck is going on? Now, one thing you'll probably start hearing analysts talk about is concentration. When you look at those large cloud providers, it's about half of Nvidia's data center revenue. So we're talking about the big dogs, the capex here and the cloud providers, Microsoft, Google, Amazon, Meta, right? Every single quarter, it seems like they're spending more and more. And this chart kind of gives you a snapshot. Analysts are coming out saying there's no way that these big dogs are going to spend more money on capex, but every single quarter they just keep raising the bar. This is an AI arms race. Now, we've talked about this. There will be a cycle, and you have to pay attention to what these big dogs are doing as they start making their own chips. But right now, if you want scalability fast, the way to do it is Nvidia. And if you understand, for example, Taiwan Semiconductor, right? When you think of Taiwan Semiconductor, they're making those most advanced chips for Nvidia. They're going to be number one on that pecking order from Taiwan Semiconductor. They have the best relationship. They're doing the most business with those smaller nanometer chips. And so it's not as easy as it sounds just to turn a light switch and say, hey, I'm Amazon and I'm just going to make all of my own chips and not use Nvidia anymore. This is at least a 2-year cycle from here when you think of the AI data center cycle. There's going to be problems with capacity as well as energy consumption, and that's something that we're working through. Now, on the flip side of Nvidia, if you look at robotics, so autonomous vehicles and robotics, that's like 1% of revenue right now, and I think there's huge total addressable market and huge upside for Nvidia stock in the future. Now, I've been long this stock since under $4 a share, and I'm not here to pump it and say that you should buy it at $180 a share necessarily, but I do think there's significant runway, even though it's a $4.4+ trillion market cap. I think Nvidia is going higher. Let's look at a chart. I'll tell you exactly what I'm talking about. Okay, so post-market, Nvidia is $175 a share. Should that be shocking to you at all? It was $86.62 in April, and it ripped from $86 up to like $185 a share. So we're talking about almost a $100 increase since April of this year. Now, if you look at where we're at on the chart, we're between the R1 and the P. This R2 Fibonacci is $190.55, R3 202.70. We're not even to the 50-day moving average, which is about $169. The 100-day simple moving average is 145 roughly. The 200-day moving average closer to 139. So would it be unreasonable to have this stock pull back to $168 to the 50-day moving average and cool off a little bit? The RSI has cooled already. It's at 60.89. The earnings call is happening right now, and of course the stock could move up or down depending on what Jensen Huang and team says. I think that this stock will consolidate and it will be $200 plus per share end of this year in 2025 or early 2026. Am I buying this stock personally? No, I bought the stock much lower. I'm covering this for our members and for our subscribers that have been buying this stock. We've been covering Nvidia since 2019. And over the years, we've had winner after winner after winner. Today, another one, MongoDB, popped 37.96% in one day. So if you like tech stocks, you like growth stocks, you like financial freedom, make sure you subscribe to this channel, click that bell for notifications. Thanks for watching. Drop me a like, drop me a comment. Have a great rest of your day. Take care.